I have the great pleasure of bringing in my second panel. I'd like to welcome four companies that I know really, really well. All fantastic stuff and really wonderful approaches in this area. So the topic on this panel is then achieving net zero requires eye-watering levels of investment, both in green finance and also in those assets that are capable of transitioning. So how can advisors explain this to clients? I really hope everyone will really emphasize the sort of nitty gritty. Come on, when you're talking to somebody, you know, if you're talking to your mum or your friend, how do you get them to explain it? So that's where I want a lot of this emphasis to be, but also, you know, information around the magnitude of the challenge we face will be really welcome as well. So with that, I will welcome David Harrison from Rathbones, Seb Below from WHEB, Mark Brennan from Foresight, and Amos Airy from Janus Henderson. So I'm hoping that you're all on the screen somewhere, and I will ask Chris hopefully to bring you up so I can see that you're there and all is well. But thank you very much everybody for joining us.
Thanks, Julia.
Cool. I like it when I can see your faces. I feel a lot more comfortable than I've
reassured.
Indeed, indeed. You all know me well enough to know what I'm like. I want to see people. So I'm going to start then by asking you all to just introduce yourselves, please, if that's all right. And shall I just go from the top of my screen down just to make it easiest? You'll condense, so it's no particular order. Mark, if I can start with you, Mark Brennan from Foresight.
Thanks, Julia, and good afternoon, everybody. So I'm Mark Brennan. I'm a director at our Foresight Group. We're a UK-based infrastructure and private equity fund manager. Started in the mid-1980s. We've been investing both in the private and the public markets into sustainability-focused asset classes since the mid-2000s. And within my own focus, I manage three of our open-ended strategies where we're investing into the listed real asset space, primarily in renewable energy and infrastructure. So the funds that we manage are distributed primarily to UK IFAs, and we invest into a lot of the listed renewables trusts, infrastructure trusts, and most recently we've launched a sustainable real estate securities fund, which is looking at the global real estate investment trust market with an explicit sustainability focus. So that's very much where we approach the market, and we manage about 850 million of assets within those three open-ended funds.
Thank you. That's great, Mark. Seb, can I come to you first? Seb, next, Seb Below from WHEB.
Well, thank you very much. Thank you very much, Julia, and thank you very much, everybody, for joining this conference. So I'm Seb. I'm a partner and head of research at a business called WHEB Asset Management. I've been involved in business and sustainability all my professional life, working in consulting first for a company called Sustainability, and then working at Henderson Global Investors, and then the last 8.5 years at WHEB. We run a single strategy at WHEB, our WHEB Sustainability Fund. It's long-only global equity fund invested in developed markets around the world. And it's focused exclusively on sustainability. It's all we do. It's all we'll ever do at WHEB. And we've got a 15-year track record now with this strategy. And the key feature really is that we only invest in companies that are selling products and services that directly enable the transition to a zero carbon and more sustainable economy. So that's, we believe that the world is moving in that direction. It felt odd saying that now 15 years ago, but it doesn't feel odd now saying it today. We think this is what's happening, and we're investing in the companies that are helping it to happen.
Fantastic, brilliant. Thank you, Zeb. So David Harrison from Rathbones.
Thanks, Julia. Hi, everybody. Thanks for joining today. So, my name is David Harrison. I work at Rathbone Unit Trust Management, where I am the fund manager on the Rathbone Global Sustainability Fund. We are an equity fund. Essentially, we're scouring the world for high quality and very sustainable businesses. We often talk about investing in companies that walk the walk in terms of sustainability. We launched the fund about 2 years ago. work very closely with our colleagues at Rathbone Greenbank Investments, who are very well known in this space. They've been involved in ethical investing and ethical research for about 30 years, and also alongside our colleagues who run the Rathbone Ethical Bond Fund. Myself, I've been involved in sustainability for about 14 years. I used to work at Hermes before. But yeah, to echo the previous speakers, it's an incredibly exciting time and really seeing the acceleration in the space, which I think is very exciting as well.
Thank you, David. And Emma Seary from Henderson's, Janus Henderson.
Afternoon, everybody. So my name is Emma Seary, and I'm a sustainability analyst within Janus Henderson. And I work primarily on the SRI strategies, with our flagship strategy being the Global Sustainable Equity Strategy. That's a role that I've been in for the last 2.5 years, but actually I have always been a sustainability professional. This is the only type of work that I look to do. And so far within Janus Henderson, in terms of our strategies, we are at around 2.5 billion assets under management across our SRI strategies.
Brilliant. Thank you all very much for introducing yourselves, and again, thank you for being here and making time for this. That's great. I'm going to I've got a list of 8 questions, as you're aware. I'm going to ask a couple of you each question, but if you want to jump in at any time, please just say something or wave your hand. I can see all of you, so just feel free to add to what others are saying. And if you have different opinions, that's absolutely fine too. I've got a funny feeling there might not be a huge amount of diversity of opinion on this panel. I think we're all largely agreed on this stuff, but if you can find differences, then that's absolutely fine too. So to start with, then let's look at how we define net zero, and I've paired Seb and Emma up on this one. So net zero, how do you explain the words? If you're an advisor, an IFA, someone maybe who's new to this area, or for that matter, someone who's more experienced, how do you have this conversation? How do you explain net zero? Emma, would you like to start first?
So I don't expect there to be much difference between my answer and Seb's, because we're both part of something called the NZC10, which was set up by P1 Investments, where they have actually defined a strategy for getting towards net zero carbon by 2030. And within that, we've committed to ensuring that at least 10% of our portfolio is net zero carbon based on scope 1, 2, and 3 emissions, that we're going to be engaging with companies to set a target for net zero carbon by 2030 if they're not already there, and that we're going to just essentially keep up the pressure on this. So for us, we look at net zero carbon as being zero carbon based on scope 1, 2, and 3 emissions.
Okay. And so if you're talking to a friend or something, when you're explaining what scope 1, 2, and 3 are, what would you say to them on that, Emma? Am I being unfair?
No, I don't think you're being unfair at all. I normally talk about it in terms of layers or onions. So I would say you scope 1 and 2 are the things that are very much within the company's control, and then scope 3 are the things that are within the company's supply chain. And I always describe it like that because I think that's more simple for people outside of the industry to completely understand. I know that that is not the most precise and scientific definition of it, but I think it's the one that people understand the best.
I like it, and I like the analogy with onions. As a big Shrek fan, I like yeah, that's the thing I like to quote regularly. So Zeb, would you like to pick up on that also? When you're a regular IFA, you've been dealing with them long enough. How did they put this to their clients in your view when they're doing a good job?
Yeah, well, I think I mean, Emma really kind of put it quite well. I mean, I think the it's really about reducing your carbon emissions to zero. And for the bit, there's a net word in there as well, though. So it's net zero carbon emissions, and the net means that you can offset as well. So if you can't reduce it to zero, then the terminology allows you to offset the residual using kind of offsetting. But that's kind of seen as you should do everything you can to reduce it as far as possible to zero, and then there's an element of offsetting by purchasing offsets, carbon offsets. I think for asset managers, though, it's quite an interesting, there's a little wrinkle to it in that, we've set at WHEB, we've set a net zero carbon target for WHEB by 2025. And that's just for our operations, though. That's our own scope 1. We don't have any scope 1 emissions. We don't burn any fossil fuels ourselves. But for our scope 2, which is the electricity that we get, that's all renewable. And then for our scope 3, which is, as Emma said, our supply chain, we've set that for ourselves. But of course, the fund is a slightly separate category. That's what the NZC10 initiative was about. That's about the fund and setting a target for the fund. And really, that's where the focus is, I think, mostly going forward, is how do you, as an asset manager, how do you shepherd your fund to a point where it's net zero carbon, and what date are you going to be able to do that by?
Absolutely, your fund is your major impact. That's what it's got the outcomes linked to it, if you like, far more than you or I being sat behind our laptops and whatever. Can I just ask if David or Mark would like to come in and add anything else on that? David,
yeah, I mean, I think it's clearly a conversation that's coming up more and more with advisors and intermediaries specifically. I don't come across many advisors who are, aligning clients for investing against that as an explicit target within their portfolios. But I think there's a general sense that that's the trajectory. Again, I think in terms of, explaining it or contextualizing it with clients, I sometimes talk about it in terms of, your bank account. We're currently running our overdraft in terms of carbon, and you can still have debits and credits, as Seb kind of explained, but really we need to be in the black rather than in the red. And I think that's at least one analogy that helps to kind of contextualize what net zero is talking about.
I think that's really useful.
Yeah, I think again, from our perspective as a fund manager, probably a third of our maybe even a half of our AUM is involved in clean energy. So we talk a lot about, the decarbonisation of energy generation as one thing, and also, when we look at the other side of the coin, which is reducing demand for energy and improving energy efficiency. Again, talking to clients a lot about the impact that real estate has, for example. Maybe a third of carbon emissions comes from real estate. So again, I think putting it into those kind of contexts it certainly helps conversations, I think, for clients.
Yeah, thank you. Yeah, David, did you want to jump in on that, or should we move on?
No, I was going to say, I think everyone's answered it brilliantly. The bit that I try and explain is maybe the other side. People, I think, understand the decarbonisation, but perhaps the negative carbon technologies. When we're speaking to advisors, the ideas about carbon capture, how that might work, but also just to be honest with them that some of the things we can do around impact on our environment and forestation, these things are incredibly powerful. But from how we act as kind of fund managers, it's more on the decarbonation side, and the stocks will invest in. And the negative side is something that there's confusion, I think, and it's something that we try and explain, but say actually this will be a smaller part of where we can often get exposure.
Okay, yeah, thank you. Just coming on to that, I've got a question come through from someone that maybe be worth someone answering. So does scope 3 not also include life cycle of the product? So that's another question from Richard Essex. Zeb, do you want to pick up on that?
Yes, it does. I mean, scope 3 is scope 1 is very clear. That's emissions that you generate by burning fossil fuels yourself. Scope 2 is pretty clear. It's where you're getting your electricity from, if that's got a carbon footprint associated with it. Scope 3 is basically everything else. So it's not a terribly helpful category, really. It covers everything. But absolutely all of that is covered by scope 3. So
okay. Maybe in due course that will get broken down a bit further to make the measurement and everything easier and more specific. But I guess at least getting 1 and 2 sorted is a start. So moving on then to the next question. So this was then picking for Mark and David most initially. Main implications for investors of net zero. What's the implication for assets? Our assets, some of them obviously we've seen a lot of change in the oil industry recently, but those assets that are set to benefit, those assets that are set to suffer. Is this already happening? Can you talk around that a little bit, maybe, David?
Yeah, I think it's a very good question, and I guess the two sides of it, the transition assets and the solution providers. I think within the transition assets, like you say, even within the oil and gas industry, that within the fund we're more focused on the solution side, but all these every single industry is going to have to think about this. So if in the energy industry and you're not thinking about how you're going to transition to lower carbon, there is the risk. Clearly, people talk about stranded assets, but in the long run, your business model could be severely impacted. But that goes the same across infrastructure, transport. Pretty much, I'd say 70–80% of the industries we look at, there's a clear implication. And we're seeing a bit of a bifurcation between companies that are thinking about this and the ones that are not really thinking it centrally. And I think over the next 5–10 years, that will be something everyone has to really think about. So yeah, absolutely. I think it touches pretty much every industry, certainly within the equity space.
Mark, would you like to?
Yeah, I mean, we have a slightly different focus to David, in the sense that we're real asset focused rather than equity focused. So it's sort of quite obvious for us in a sense, in that we invest into solar and wind and bioenergy and other areas where you've seen a huge amount of support, both from governments in terms of subsidy mechanisms, etc., but also in terms of increasingly institutional investors coming in to acquire de-risk operational assets. So I think the implications for investors is that the opportunity set is only going to grow. I think I was working for the Green Investment Bank 7 years ago, and we helped to set up Greencoat UK Wind, which is the first renewables investment trust. I now invest in that through my own funds that I manage. And there's been a real conveyor belt of assets coming through the private markets into the public markets, and really becoming accessible for retail investors. Even in the last 18 months, you've seen energy efficiency IPOs in London, again, bringing new assets through. I think as you look at the growth in hydrogen, carbon capture technology, again, I think from a real asset perspective, it's our expectation that over time, those assets will find their way into the public markets, just like solar and wind did. And the opportunity set will just continue to grow for investors.
Okay. This is an unfair one. I'm going to throw this in very briefly, and I know we could talk all day for it, but this is a question from Danny from Royal London, asking what the panel thinks about the forthcoming US presidential election and climate change. Obviously, we could talk on that all day, but does anyone want to just have a quick, let's say a few words on that? I think that's worth getting it on the record if someone's prepared to make any comments. Obviously, don't feel obliged to.
No, I can't resist it. I mean,
that's why I couldn't resist saying it.
Well, I can't resist being a bit depressing about it, perhaps. I mean, I think a number of climate scientists have said this, actually, that they would consider a Trump re-election to be absolutely devastating from a climate change point of view. I mean, we're already so late to really deal with this issue, and the opportunity to get a president who actually, and a vice president in particular, who are really up for the challenge. If we end up with Trump again, and I say we because it affects all of us, even though we don't have any influence really, I think it would be devastating. And yeah, so I'm glued to 538 polls in a very unhealthy way. I can't, but I'm cautiously optimistic. Can I say that without tempting fate?
Yeah, I mean, I think I would agree that there's no doubt Trump's going to be a worse outcome than a Democratic victory. That being said, I think even now there are positive signs of what's happening in the North American market. Again, from my perspective, looking particularly at renewables, where you've had some of the oil and gas majors start to get involved in offshore wind assets, etc. And I think whilst the US has no doubt been behind Europe in terms of building out clean energy infrastructure, I think once it gets going, and this certainly feels like it's starting to get going, and a lot of the progress in Canada is starting to be seen in the US. I still think there's room for optimism, but there's no doubt that a continuation of the current administration for another 4 years would be a less positive outcome, I think.
Yeah, to put it mildly, right? I've got some really great questions coming in for people here. So if we can try and allow time at the end to come through, I love some of these questions, way better than mine. But just because I promised you these questions, I'm gonna crack through them. So the next ones, I think, if I've got my notes right, I put down Seb and David for. So I wanted you to articulate, if you could. So there's obviously, we know that we need innovation, and we also need to change behaviours. So new companies, old companies. Briefly, where are you on the positive scale? So supporting solutions companies versus the transition scale, focusing on changing what existing companies do. And actually, I'll come on to others on this. I think I'll bring you all in on this if I can. So Zeb, would you like to kick off on that?
Yeah, sure. And I mean, it touches on a couple of questions that kind of touch on this area as well. I mean, we are 100% focused on solutions, as I originally said, not just environmental solutions, but social issues as well. So I mean, sustainability ultimately is really a concept that's focused on people, not just the environment for people. So we invest in health and education and things like that as well. But yeah, we're 100% focused on solutions. And I think the risk, to use that word perhaps inadvisedly, of talking about climate change is that it becomes all about risk. Everyone sees it as being about risk. And there's even a question about, is the cost of net zero going to result in lower long-term returns? Well, it will certainly for some companies. I mean, the oil and gas sector, clearly, but it'll result in superior returns for other parts of the economy, the parts of the economy that we're invested in. What will definitely be a poor outcome for everyone is if we allow climate change to continue unabated. That is kind of a wholesale negative. But the shift to net zero is a fantastic opportunity for a lot of companies. And we often miss that in this conversation. It just seems to be about risk. I mean, nothing could be further from the truth. It's a huge opportunity for a significant and growing part of the global economy. And that's where we're focused.
Yeah, there's going to be a lot of money made in this area. As you say, people are not recognising the opportunity. I completely agree with that. Who did I say I was going to bring on that one as well? Was that David? Yes.
Yeah, so very similar to Seb. So I guess very much on the solution side. So yeah, we have a very clear framework on the fund that we don't invest in carbon assets anyway. And our carbon footprint, I think, is about 80% below the global index. And we have a stated aim of really getting better. So the companies we buy, we want them to be the leaders in terms of decarbonisation. And absolutely, I mean, every sector where we look, renewables is an obvious area. We have lots of renewable exposure in the fund. But I think there's other sectors as well. You mentioned, Julia, about something like a building insulation. It's something perhaps is less exciting to other people, but one of the biggest areas where we can have huge gains is what we do on commercial residential buildings. And we've got exposure through business like Kingspan we've had from day one, and you speak to them and you just think, actually, if we get this right, the impact is huge. Also on the transport side, electric vehicles, I think finally after kind of years of hearing about this, we're starting to see real acceleration come through. So yeah, absolutely on the solution side, and the opportunity set is just getting bigger and bigger.
Okay, so I'm going to point to a question now, which I will come back to at the end, just to give you all the chance to think about it. But I've got a question from Mike Head, old friend at Ethical Investors and Ethical Screening, asking what those of you who are part of bigger institutions are doing to kind of encourage the rest of your organisation to move along in the right direction. So I'm giving you warning of that one now. But so I will first move back to Mark and Amma for this next question, though, which is that how would you like intermediaries to describe what you are doing, both at a fund level and across your business, to help achieve net zero? So what would you like intermediaries to be communicating? Amma, would you like to take that first?
Yeah, sure. So I would love intermediaries to say that we are relentless, hope-filled investors, because you can't actually work in sustainability without actually believing that things will get better. But I also want them to take away from the fact that because we are relentless, hope-filled investors, we also are being incredibly rigorous and evidence-driven with what we're doing. This is not this is not us putting our finger in the air and going, oh, we think that this might work. This is actually us using the scientific evidence, the data that's out there, to then inform our investment decisions, to then reduce risk, but also really maximize those opportunities that have been discussed earlier.
Cool. And Mark, thoughts on that?
Yeah, I think fundamentally, I'm keen for intermediaries and their clients to understand that we really see ourselves as shepherds of capital, and we have the ability to direct that capital towards companies that need it, and towards areas of the economy that need it in order to move things forward. So, when again we're in the real asset space, and so when companies are raising capital to grow their business and buy a new wind farm or build a new asset, we're there to help fund that. And so I think it is very much seeing ourselves as bringing capital to a growing market that is supportive of that net zero objective. And again, I think thinking about our wider experience as a business, keen that intermediaries understand that what we do on our funds draws on the expertise that we have on the private market side from the other side of our business, and so really integrating kind of a hands-on understanding of how to build and manage a solar plant, and bringing that to the listed markets, and how we direct capital to companies that are growing in the right direction. So that's really what I'd say.
Yeah, I think that's great, and I think hopefully that plays to the point I made in the introduction, where I was talking about the role of intermediaries, whether you're a financial advisor or a platform, that you're giving the voice to the real investors, those people who've got to make a choice as to, does my money go in this kind of fund or that kind of a fund? In many ways, it matters little as to what maybe the whole company's doing, but if they're not being given that opportunity, how do you get those assets driven through to your funds, Mark, or to all the funds here we're talking about? Yeah. Does anyone else want to come in on that point at all, or shall we move on to the next question? We're okay for time at the minute. Any more on describing it to clients? No. Okay, so
I think, Julia, I was going to say the other thing I was going to say on that point, which we talk a lot about, is the transparency element with clients as well. So we try to speak about is that we publish every year, we show every single holding in the fund, all our engagement. So I think it's an area that's growing. I think the more you can give to clients to explain, there's lots of different definitions of ESG, sustainability, where you're positioned, and I think that transparency is really important, and that's something that we talk a lot about, and I think investors really like.
I think that's right. I think the role of communication and getting the information out there in words that people understand just can't be underestimated. It's so important. Thank you. Yeah. So asking for the next question then is I wanted to ask you if you have any tips for those that are newer to the area. So things that advisors can use with their clients. If a client's, sometimes advisors struggle because their clients may know more about this than they do, but often neither of them know very much about it. And we all know this is a massive growing opportunity. So what tips would you give to people for, okay, this is how you get started? Who should we start with? Zeb, maybe?
Well, surely the answer here is that they should be directed to the wonderful SRI Services website and expertise that you have, Julia. But seriously, I think there are places on the web, including SRI Services, that are designed to make that journey easier for people. And you've had many years of experience of doing that, so I think that's as good a starting point as any, really. I mean, I think probably the other tip, if you like, that I would offer is that I think a lot of people come at this, not just IFAs, but everyone really comes at this agenda often with a bit of baggage, and some of that baggage is because of a number of these funds, a number of us started in the sort of ethical, quote unquote, world, and there is there's always this perception that comes at a cost, that you're going to, your performance is going to be compromised by your normative position on ethical issues, not being able to invest in certain parts of the market. But the thing is, the world has changed, and the strategies that are available have changed as well. And actually, if you believe that the world is beginning to move in this direction towards sustainability, then going back to the point earlier on, there is a huge commercial opportunity for businesses that have the products and services that will enable that transition. And you can just present this as a commercial proposition. This is just the best way to invest your money if you want a return. And I think a lot of people still have to get over that hurdle of sort of reframing this. It's not really about ethics anymore. It's just about the way the world is going. And you can invest in companies that are doing good things, so you can still feel good about the ethics, but they're also generating superior performance. So for me, that would be a kind of philosophical change that people have to get through, and then use the great services that you provide and others to understand this the space in more detail.
Yes, thank you. And then, yeah, very, very kind plug there. I mean, it is such a challenge, particularly to get people through it's not about ethics, it's not going to cost you. That's point really, really well made there. David, would you like to expand on that?
Yeah, I think all very powerful points. I mean, I'd say just kind of keep it simple. I think this is an area where, to my experience, I've seen things come and go. I think the phrase Boris Johnson, that moonshot technologies, you don't have to go down this route. A few of us talked about this. You can buy good quality companies that are exposed to these trends. They're well managed, and you hold them for the long run. And that's where I think you need to be positioned, rather than something that might be here today and gone tomorrow. So I'd say that, and also a balanced approach to sustainability. So if it's a fund, perhaps not be exposed to one very narrow area if it's an equity fund, but well managed and diversified. And I think that will see you right in the long run.
Which you can, of course, do with a portfolio as well. So there's room for the more specialist funds alongside others. I think that's a really good point to bring out. So it depends maybe how much money someone's got or how they're running their finances. But yes, I think that's a really good point. Amma, did you want to add anything on that, or Mark possibly?
I would add that everybody has an internal, how do I put this politely, rubbish filter. As in, everybody has an internal filter that actually says, I'm not sure if this person is telling me the truth about this particular issue, or I'm not sure if I'm actually getting the full story here. And the best advice that I can give to anybody is to trust that filter. If you're not confident in the answers that you are getting, then ask and ask and ask and interrogate that. I'm sure majority of us on this panel, we've been doing this for so long now that we're not afraid of being interrogated. We're not afraid of being asked questions. And actually, if you find somebody that is afraid of asking those questions, that is a huge red flag as to actually you might be getting into something that may not be serving your customers as well as you'd like them to.
I think that's a really good point. I was trying to bring that out of my introduction as well, saying I'm not afraid to say that the SRI styles we have that we created to make this easier for people are not perfect, because there's overlap between them and there's differences within them, and that's just real life. And I think you're absolutely right. There are so many people who seem to be putting out products that just don't want to be crossed on their imperfections, which is an absolute red flag. So yeah, top comment. Thank you, Emma. Mark, did you want to add anything to that at all?
Yeah, I mean, again, I think I certainly spend quite a lot of time when I'm talking to advisors, just really talking about what allocations into these sorts of areas can do from a portfolio perspective, how it can affect the overall risk of their portfolios, how it can affect the overall yield and diversification, and it's generally all very positive. And especially at the moment, a lot of advisors are struggling with traditional 60-40 portfolios. Like, what do I do? Where do I get my yield? I don't want to be long bonds. What do I do? And so I think a lot of what these kind of solutions and net zero focused strategies are delivering from an investment characteristic perspective are also very, very useful in portfolios, and that might not be something that intermediaries have sort of spotted. So I often focus on that.
Okay, excellent, thank you. So my final question, and we have got a number of questions that have come in, which I will try and get to. So what, if anything, do you see changing over the coming months and years? Obviously, we've touched on how things in the previous panel and how things changed over the last 6 months. but maybe with reference to some of the net zero and solutions versus transition stuff, maybe try and bring that in. If I can maybe start with Amma on this one. So changes that you're expecting.
I'm expecting more businesses to actually commit to becoming net zero. We can see that this trend is moving, and actually it's not really determined based on politics. So I know, coming back to the question earlier regarding Donald Trump, this is a trend that is continuing regardless of who ends up in the White House in November. And there are several of these other trends. I can see circularity becoming a much bigger issue in the future. And I can also see a whole bunch of people making a lot of money by capitalizing on these opportunities. And then other people who were looking at this sector with a bit of derision in the past, actually then going, I wish I'd actually invested in this.
Yep. Yep. Absolutely. Sorry, Zeb, did you want to say something?
Well, I was just sort of mumbling in agreement, I think, probably. But now that I have the microphone, I mean, I think probably, yeah, we're just at the start, really. And I think my kind of parting point really would be for people to see this as a strategic shift. This isn't this isn't a tactical thing. This is about the shape of our economy and what that looks like in the coming decades. And so if, as an advisor, you're new to this, it is worth investing some time and energy in really understanding it, because it is going to get more intense and more of a focus. So I think it's a good investment at this time to really take the time to try and understand it, rather than think of it just as another box to tick. So that would be, the change that I think is coming.
Okay, thank you. Indeed. So Mark, did you want to come in on changes?
I think the only sort of, I think we'll continue to see acceleration in a lot of these themes, and I think we'll probably also see an increasingly important role to be played from private capital. Again, I think historically, where you've seen a lot of government support and intervention in some of these solutions, I think you'll still see some of that. But I think given where balance sheets are now, thanks to COVID, I think the role of private capital, and therefore the role of funds and fund managers in directing that private capital will only become more influential, I think, in terms of which sectors get capital, and again, that creates even more of an imperative for companies to realize this is a capital markets issue for them, and so I think those things will all accelerate.
I think that's all absolutely right. That brings me through to a couple of the questions we've had on this, where people are touching on things around fund management institutions as a whole. Are they, what are you guys doing? If you work in a big company, what are you doing to try and influence and upskill people in your own organizations and frankly change their behaviors? And also, adhering to net zero in their own portfolios. So other portfolios, are you bringing that across, starting to do some management there? Shall I start maybe with, well, obviously that's more David and Amma, but David, would you like to kick off there? Are you able to?
Yeah, so maybe outside our fund, the other fund managers I know, who I work with, this is something everybody's thinking about. So they are thinking, if they do invest in transition assets, they are thinking, within sectors, which companies are thinking about ESG issues in general, particularly around carbon decarbonisation. We're doing a lot more outside on engagement, on kind of enhanced engagement. So, I think all the funds, irrespective of the kind of their strategy, this is something over the last 12 months that has become a lot more central. I think we can do more. And as respect the wider Rathbone Brothers group, we much more of a focus on ESG integration across the group, a clear commitment around responsible investing. It's been, in a year, we've seen probably a much faster acceleration than the previous 10. So across the group, I sat on a number of committees, and this is something that is reaching far and wide.
Excellent, thank you. That's likewise, that's the impression I'm getting of Rathbones also. Amma, would you like to say something what's happening in Janus Henderson?
Yes, so with regards to this has been identified as a business continuity issue. We're not going to make money unless we actually unless this is taken seriously across the organization. So one of the good things that has happened is that I've had so many more of my colleagues looking to come to us on the team, the Global Sustainable Equity team, and just ask us, what are you doing? And how could we translate it to what we do? And they're keen. And we've run lots of training sessions. So in a past life before this, I used to actually teach sustainable construction. So I've created quite a few training courses that are run across the business, teaching on sustainable investing. And we've also set up quite a number of committees. But I think the key thing here is that we've got people who are super keen to actually make the changes to their own portfolio. And it's not just lip service. It's people who are looking at these issues and going, well, actually, we want to be part of that opportunity too.
That is music to my ears. That's wonderful to hear. Thank you, Emma. Can I just ask you all to really just say probably 1 or 2 sentences closing, because I promised you the opportunity to do so, but we're kind of out of time now, but I'm going to start from the top again. Mark.
Yeah, I mean, I think, I think it's only going to become a bigger focus for advisors in terms of how they integrate these things into the proposition and the need that they're going to have to explain to clients. So I think I would probably just encourage intermediaries that are dipping their toe, I suppose, to recognise this is going to be a very important part of their own business for the next decade or two.
Yes.
And that it's not too late. We are very much at the beginning of this opportunity.
Yeah, I think this will see me out. So can I ask you to just a couple of winding up remarks? Anything that we've missed? Anything you'd like to add?
No, I think it's been a very helpful conversation. I'm not sure we delivered on the trying to find those areas of disagreement. I think we're pretty much all aligned around this agenda and how important it is already and how important it's going to be, and the need for everyone to get involved. I guess maybe slightly provocatively, there's obviously a focus on us as asset managers and how we're positioned on net zero carbon for our own organizations as well as the funds that we manage. I wonder how many IFAs out there have actually embarked on a net zero carbon journey themselves. Maybe there's something that can be done to support the industry, the IFA industry, to become net zero carbon too.
Well, hope for the PIM for ESG Academy that everyone will be hearing about later, that I've spent most of the summer on. Hopefully that will help. It's not specifically net zero, but it's just the foundations for this. But thank you. Yes, good point. David, can I come to you next?
Yeah, just reiterate the point that it's still very, very early on. You've not missed the boat. That's already been well said. And a point as well that's been raised, you're not giving up financial return. I often argue you're enhancing your potential financial return. I think there's still that perception that needs to be changed in some areas. So on both fronts, it's very exciting. Yeah,
thank you. Emma, would you like to say a few words closing, Emma?
Yes, sure. So I would say that this is just one part of sustainability as a whole. And I wouldn't necessarily put this above all other aspects of sustainability. They are equal and valid in their own rights. And I would encourage everybody to have a look and listen to some of the other panels today and really get that rounded knowledge of sustainability to then apply to what you're doing. This is just one slither of everything regarding all the things that we cover as asset managers.
Lovely, perfect. Thank you for that comment, Emma. That's much appreciated. With that, I'm going to close because we're a couple of minutes over now, which we were running earlier. Thank you so much, everybody, for joining me. I really appreciate it.